Welcome back to Fast Market here on the Schwab Network. It's time for cash tags. For that, let's bring in our next guest. It's going to be Landon Swan, co-founder at LikeFolio. Welcome back to the show, Landon.
Thanks. It's great to be here.
Quite a roller coaster. You know, typically when you talk about McDonald's, you see something consistent up and to the right. But it's been a roller coaster after the last year and a half or so. But seen a nice snapback rally just off all-time highs, but still up only, about a 1.5% so far this year. What gives?
What gives? I love it. So look, if you look at that 2-year chart, it runs up to 300, pulls back, runs up to 300 again, pulls back. This time we got through 300, just trading above, I think maybe 306, something like that right now. So, you could argue this is a bull flag. You could argue this is a triple top. The technicians can go at it, but it does look like the stock is obviously high within that range. And on the last report, it's kind of the same story that we talked about with Pepsi yesterday is, consumers are saying that the prices are too high. I mean, forever, McDonald's has been, the pillars of McDonald's have been value and affordability, right? And a lot of people are now looking at the prices and saying, you know what, this really doesn't make sense anymore. This isn't a cheap, quick meal. This is a quick meal that costs a good amount. So this is, they're really getting hurt by their prices. And they consumers no longer see this as a good deal. I mean, they missed on revenue last report. They missed on earnings. Same-store sales were down about 1%. They expected them to gain about 0.4%. They were down 1%, pretty much across all of their locations, all of their regions, U.S. and international. So, we even covered it when we talked about Longhorn Steakhouse. People are saying that they realize that you can go there and it costs the same as Five Guys, right? I mean, you can kind of throw Five Guys in with McDonald's, but fast food in general is starting to get a bad reputation for inaffordability, where it used to be all about affordability. So I think that's a big problem. In fact, when people were recently surveyed and they were asked, what are the things that you're cutting back on because of inflation? The number one was eating out. It was 58% of U.S. consumers are talking about reducing, eating out, dining out. And that was by far, I mean, you can see movie tickets and experiences are about 33%. Eating out is 60%. That's 3 out of 5 people. So that is a huge number for them. And then when you look at how McDonald's is doing in the space, both on demand, consumer demand and happiness, they're kind of at the bottom of the pack. It's just, wherever, whoever you throw in there, it's just not great. This is consumer demand. McDonald's is at the bottom of the pack. This is a year-over-year change. And when you change this to happiness, it's basically the same thing. McDonald's is at the bottom of the pack. And I think a lot of it has to do with the fact that people aren't getting the value that they're used to. They're okay with the food quality maybe being a little bit less than some of these others, but it has to be a good deal, right? You got to be able to go in there and have a good deal. Now, to their defense, they're trying a lot of things. I mean, they're trying discounts via their loyalty program. They have offers that pop up in the mobile app. They're trying a new chicken Big Mac. I think that's Thursday. So if you guys are interested, go get it. And one of the things that they've actually tried is the $5 value meal, bringing that back. It was a test run. It worked really well. They're extending it. They're starting to see that the perception of value is starting to come back, especially among the low-income consumers, which is key for McDonald's. And so I think that's, it's showing that they're trying different things, but, it's all about what's working. And so the effort is there, but we're not to the point of results just yet. So given where the stock is at those all-time highs, basically top of a range, and the fact that, everybody's just cutting back and, they don't love McDonald's right now, I'd say that, we're going to have to lean bearish on this when the earnings come up, and we still got a little bit of time. But, right now, if I was a shareholder, I'd say maybe I'll take profits and see how things look going into earnings in a few weeks. But right now, it seems a little rich.
Landon, Tom, Kevin, we all have, childhood memories from McDonald's, right? Yeah. And how much we loved McDonald's. And for a little bit, our children probably have some of those because we took them there, right? But our children, we're the boomers, they're the zoomers. They don't have those same memories. Our children like Chipotle and other places that aren't McDonald's to eat. They like Chipotle is more popular with the younger demographic, and they promote to them, and it's just a better relationship. Has McDonald's lost that age demo? I mean, can they get them back with digital marketing? What can they do? Because it appears to me like if you let a kid go wherever they want, if you got a kid 12 to 20, they're going to go to Chipotle. They're going to go somewhere where, like a healthier fast food case here.
Or better
doesn't
tasting.
seem like McDonald's, yeah.
Or better tasting.
Yeah, better tasting. And you know what I think it is? I'm going to date myself a little bit here, but when I was a kid, it was fun. They had the statues of Ronald McDonald. They had a play set and had Happy Meals. It was colorful. Now, all the McDonald's look like banks. I mean, it's all gray and white, and there's no play areas, and it's just kind of like, okay, do you want some food? And it used to be cheap, and now it's kind of medium price. It's like, you're losing your appeal here, McDonald's. So I think that, I think they gotta. I don't want to say reinvent, but they've got to definitely look at what is it that they're known for. Forever, like I said, value and affordability. They've lost that, and now they got to get back to that because, frankly, they're going to have a hard time competing on taste with all those, the ones that you mentioned, Chipotle especially. All the others, I mean, that's some really good food out there. And if you look at the prices, it's not that far off. Chipotle can handle a little bit more of price increases because their consumers are a little bit higher end. And so there's a more elastic demand. With McDonald's, you're in a tighter range with those consumers, and you just can't start bumping up and bumping up and bumping up. Eventually, they're going to look at that ticket and say, dang, we could have eaten at Chipotle for $5 more for our entire family next time we're going there. And that's exactly what's happening. So I think that they've moved in the wrong direction. I think they've handled inflation poorly. I mean, obviously, that's why they're raising prices, but you've got to make the case to consumers as to why they should continue to eat at your establishment. And if it's always been value and affordability and that goes away, then what's the case? Because now everything else looks more appealing.
Here's the thing, though, Landon, if you look at the rebound that we've seen since the beginning of July when this stock was trading, 240 something, 245, it's all probably based on the fact that they keep extending this $5 meal deal. So going into earnings, later this month on the 29th, you would expect their same-store sales to increase. But is this going to be at the cost of margins because they had to keep on raising prices because of inflationary pressures? But now, hey, they flipped the script on that narrative. That's why the stock went back to all-time highs. But is this like a Band-Aid on a bigger problem? Because your data kind of reflects that, hey, it's not only price, it's taste too.
Yeah, it is. And it's kind of a pick your poison. I mean, you either have lower sales because the prices are too high, or you go these value meals and everybody's coming in and buying them and your margins get squeezed. So, investors are going to have to pick between one of the two. They can't have both. They can't have high sales and high margins. This is not the right business for that. So that, I think that's going to be a definite problem. It's going to be revealed on earnings to see what is it that investors are interested in. Because I think you're right. I think margins are going to go down. I did see a stat that of the people who buy the $5 value meal, their average ticket is $10. So, it's not just like you're going in there with a family of four. One person gets the value meal and everybody else loads up on everything else, and it's $30 for the meal. No, they're getting like two value meals. Like they're going in for the very low margin items. They're saving money, and it's they might increase sales that way, and they might win customers over in the long term. But short term, I don't think it's going to deliver what investors are looking for. Now they are also looking at ways to cut costs. They're adding a lot more of these digital kiosks, which they say increases accuracy and increases order speed. Anecdotally, I think it takes much longer to punch all that in than just to tell someone what you want. But that's me, and I think it's a little bit more frustrating. It's less appealing, I know, to walk in and think, all right, I got my wife, me, and 3 kids, and I got to punch this screen for like 5 minutes as opposed to just telling somebody what I want. So I don't know about that, but they're trying things. They're not just sitting idly by and letting inflation kind of kick their butts. They're trying things, but I'd be way more bullish if this was a $240 stock and I'm saying, hey, look, they're trying things. They're going to turn this around. But now it's a $306 stock, all-time highs. Like, all right, let's maybe sell off into this little run, take some profits, and see where things are at in a few weeks.
All right, great discussion, great data as always, Landon. Appreciate it.
Thanks, guys.
All right, that's Landon Swan, co-founder at LikeFolio.
Do the whole show on this. Remember they used to have the play